What's going on, everybody? I hope you guys had an amazing day on this extremely red day that caught many people off guard. I told you guys that the market could be pulling back. It would be completely normal for the market to pull back because in the past few days, the SPY itself jumped up $22, guys. And we made almost new all-time highs on the SPY in literally a few days. So having a bit of a red day is completely normal. There's no reason to fear, but it's just very important that you guys manage your risk properly. You can't allow your emotions to dictate your trading, period. If you allow yourself to be manipulated by your emotions, then you are never going to become a profitable trader. You have to you have to think of trading and your emotions and everything in a completely different way. And you have to allow yourself to learn from your mistakes instead of handling the emotional defeats by, going to sleep or eating or just getting drunk or smoking. You have to deal with the pain. You have to learn from your mistakes. You have to sit down. You have to look at yourself. Like, why did I do this? Did I put too much of my portfolio into this play because I wanted to become rich overnight? Am I trying to become rich overnight in something that 95% of the world can't do? Why did you do that? You have to ask yourself these questions. And so today, I posted a watch list and I posted levels to go long or short below. And if you followed any of these, the puts Lucid below 41, Nvidia below 314, Tesla, guys, if you took any of these plays, these would have worked out spectacularly. I post all of them completely for free on my Twitter. So in today's video, we're gonna talk about the indices market, we're gonna talk about the crypto market and what the next steps are. All right, so I hope you guys enjoyed the video. Please make sure to subscribe, to comment, to like, do all that good stuff, put on bell notifications, and let's get started with the video. All right, number one, let's go ahead and take a look at the SPY. All right, so we had a red day, obviously. The closest level of support for the SPY is going to be this 618% fib level at 464.14. Now that, whatever, we can fall back down to that level. Cool. All right. All of these levels, you guys can pause the video and you can jot them on your chart. You can make this Fibonacci the exact way that I did on my chart, right? But the thing that I want you guys to see is that the MACD is extremely overbought, like very, very extended to the upside, right? So when that is the case, having a red day is completely normal because, first of all, we skyrocketed like to the moon in a complete V-shaped recovery in the past few days. The SPY jumped up $22. So having a bit of a red day when indicators are this overextended, right? The algorithms, they look for multiple parameters to algorithmically buy into the market. So when the market is not giving a favorable indication that, hey, like now is the time to put in a crap ton of money into the market, the algorithms will not take the trade, right? They're going to sell. They're going to take profit. Does that make sense? You have to think in terms of where the big money is putting their money, why they're putting their money in the way that they are, okay? This market isn't as much determined by retail as we might think, right? So yes, the indicators completely overextended, did not give a good buy signal. So that's why the SPY, everything, tumbled down a bit. So yeah, the SPY, those are the support levels. What's more important to look at right now are the other two indices because the NASDAQ closed exactly at the 50% fib level at 393.80. Literally, you can see that it held this support. Looks really, really good here, right? But of course, it can also fall back down to 390.29. That's the next level of support below. Does not look as overextended on the MACD as the SPY does, and is sitting at pretty decent Fibonacci support, right? But of course, since the SPY has tons more room to the downside until 464, so another $2, right? That means that the NASDAQ can also fall a bit more as well, right? So there's that. But again, huge V-shaped recovery. So again, it's not as if this is some, failed breakout. This could all just be a potential amazing dip buying opportunity in the next few days. So either tomorrow or on Monday, the markets could fall down just a bit more, and that could signal, you know, a good dip buying opportunity. But we just have to see if 390 can hold on the NASDAQ, and then if 388 can hold on the NASDAQ. Those are the two really, really important levels of support on the NASDAQ. Next, let's take a look at the IWM, right? The IWM also closed right at a major level of Fibonacci support at the 23.6% Fib level at 220.54. Okay, and as you can see, the IWM MACD is extremely overextended, right? Because it had the biggest downward move. You have to think about the market in terms of a rubber band and momentum, right? So when something dramatically falls, the momentum, any small movement to the upside is going to cause this indicator to drastically move up, right? So since that is exactly what happened, right? Since that is exactly the case here, and we came to, you know, a pretty important level of resistance, and we failed at that on the IWM. The algorithms also saw that this was not a favorable buying opportunity here. The indicators were not as favorable as they were a few days ago, even a week ago. Sorry, the indicators were not as favorable right now as they were a week ago. So, you know, they want to wait for the indicators to even themselves out to give them a better buying opportunity. Again, there are hundreds of different parameters that these people have coded in so that if specific parameters get met, then it's a higher likely chance that they'll allocate more money to that trade. And they'll only take certain trades once X amount of those parameters are met. All right. So it's all literally a giant game of data. And that's why supercomputers and things like that are very, very prevalent, because they have to go through enormous amounts of data in split seconds. And that's exactly what they do with billions of dollars, by the way. So yeah, that's I hope you guys understood what I just meant by all that. But yeah, so the IWM needs to hold 220.54, very important level, and then it needs to hold 218.11. Right? If it could hold those two levels, then again, this could just be a very nice buying opportunity. You know, this could just be a bull flag on the indices if we do continue falling, right? Or yeah, like if we continue falling tomorrow and Monday, this could just be nice little bull flags that are just created here. And that would just be completely normal because we had a V-shaped recovery, guys. So yeah, just be wary. Don't get shaken out. The market is still bullish. The Fed is not, you know, they didn't say anything about tapering. They haven't stopped. They haven't began tapering. They've mentioned it, but they haven't began it. So we're still in the same market condition. They use fear to drive the price down, make people sell, and they literally just buy it up and then bring it back up. So don't fall for that. Don't fall for this. It's completely normal. You know, to have a bit of a red day after huge green days. And yeah, just don't fret. So there's my analysis on the overall indices market. I do think that tomorrow and Monday they could be red, right? But again, you know, if anything changes, I'll post it on Twitter. But yeah, that's how it looks for now. Things could fall back down to these levels of support that I mentioned. And yeah, just be careful and trade smart. So now let's go ahead and take a look at Bitcoin. So yesterday I said that Bitcoin, you know, does not look very bullish at all, right? So this is exactly what happened. We fell yesterday from what, 50,000 when I was making this YouTube video. Now we're at 47.8, right? If Bitcoin does not hold 47,111, which is this low right here from this candle here, then it's going to come back and retest this 50% fib level of this wick, at least, which is going to be at 45,700. So if 47.11 breaks, we're going to fall back down to 47.11. And then guys, like if the fall just continues, then it's very, very possible that we come back and retest this very, very important blue trend line right here. which would set Bitcoin at around 40,000, 41 to 42,000. So those, I mean, guys, the indicators were not favorable all throughout here. For the past few weeks, the indicators were not favorable. That's why the algorithms, they sold, because the price action was not moving in their favor. And I mean, it's literally just a bunch of parameters. It's like if the parameters look bearish, they're going to sell. If the parameters look bullish and there's enough reasons for them to go long, they're going to buy. But right now, these parameters on the MACD, for example, not bullish at all, because the price is falling. We worked out the oversold condition. Imagine, all right, so look, imagine the RSI on a stock was really, really oversold, right? Oh, really oversold right here, right? And the stock is now trading right here, and there's, resistance over here. Imagine the RSI goes from freaking negative 20, sharply jumps up all the way to 50. Yet the price of the stock or whatever doesn't even break above resistance. So the entire RSI being oversold, all of that momentum that was potentially being built up to make a huge, strong move above resistance, failed. That is basically exactly what happened and is happening on Bitcoin currently. This MACD signaled extreme weakness, and it sharply jumped back up while failing to break above levels of resistance here. And that is not good at all. So that's why I said yesterday that the market, that Bitcoin most likely will fall back down to 45.7. And it looks like that's what might happen. But, of course, 111 needs to hold. And overall, the RSI is still not friggin' oversold yet. The RSI is not oversold yet. So there's still, we could still have another vomit to the downside and bring Bitcoin back down to 41, 42,000. And just be careful. Make sure you have more ammo to buy when it's cheaper, okay? And of course, I could be completely wrong. One thing that would invalidate this is a bunch of billionaires collectively buying Bitcoin and pumping the price back up. And for Bitcoin to close above 52,000. If Bitcoin closes above 52,000 and then it closes above 53,000, then that's it. Like this whole bearish move right here is completely invalidated, in my opinion. All right, so there's my analysis on the stock market, on the crypto market. I hope you guys enjoyed it, and definitely if you guys made it to the end of the video, definitely make sure to subscribe, put on post notifications, put on the little bell whistle, ding, whatever that, right? So please go ahead and do that, and I will see you guys tomorrow. Thanks.